Thank you for being here on Real Estate in the Lowcountry. Benji Gecy of Beaufort Lending is here, and we normally start out talking about rates, and we're going to talk about rates, but we're going to talk about something else first because there was some big news coming out about conforming loans. So let's talk about that.
Yeah, I was starting to think about those rates, got a little confused there, but yes, a little bit of mortgage news. New conforming loan limit, $803,000. That's up from $766 or so. But I think that's important for our area here, especially Hilton Head Island. Average home sales are around $765,000. Charleston, $565,000. Beaufort's around $401,000. But in Hilton Head, we got a lot of homes over $1 million too. When you put down that 20 or 30%, you're right there around $800,000. You're always fighting that conforming loan limit. But the difference between a jumbo loan and a conforming loan, about 0.75%. So on $800,000, that's about $400 a month. So big deal. It's only 40 or 50,000, but it does affect a lot of people, believe it or not. So I'm still waiting on some programs to come out for affordability. We're helping our affluent homeowners here in Hilton Head, but we're still fighting for that affordability, and home prices are going up. I think the 765 was up 4% from last year. Charleston was up 8%. Beaufort was up about 4 or 5% from last year. So home prices are still going up a little bit. So hopefully we can get these rates continuing to go down.
Yeah. So we're not seeing the huge jumps in home prices that we saw in the last couple of years, but still kind of trending that way.
Still ticking up a little bit.
Yeah.
Still ticking up a little bit. So new conforming loan limit, that's a big deal for our area, especially Hilton Head Island.
Absolutely. All right. So let's jump into rates because I actually talked to you on the news more recently than here on Real Estate in the Lowcountry, and we were talking about the rates and what the Feds had done and how the market reacted, which is a little bit different than I think people are expecting.
That was very unusual, and our last interview here on Real Estate in the Lowcountry, I kind of warned that rates might bump up a little bit. We had 6 straight weeks. Rates were really attractive, and we had a lot of people locking in, but we also had a lot of people waiting, thinking that rates were going to go lower. I had a pretty good idea that rates were going to bump up a little bit, but for the last 2 weeks, rates have really moved up, and it's shaking the markets pretty good. So some unusual activity there, but I wouldn't panic too much. I think rates are still going a little lower. I do not think the markets were anticipating the 50 basis point bump. We've got another one coming here in November, but I don't think we're going to make too many moves here before the election. It's probably going to trade sideways a little bit, but we do need some more good data coming in, and if more data comes in tomorrow, we've got some more information coming in, get more of that, we can see rates slide a little bit. For right now, rates are still pretty good. We're still 1.5 points lower than where we were a year ago. So that's pretty good, and we talked about it before we got on air. Refinance applications are up 700% from a year ago.
It's a huge number.
Yeah, exactly. Nobody was watching us a year ago, Betsy,
right.
But now they're starting to pay attention to the rates. So a little more attractive right now. Rates are coming down, creating lots of refinance opportunities, and with the home prices selling at where they are, the values are there as well. So a lot of people are taking advantage of their equity on refinances. So we'll see if that continues or not.
Well, and before we started filming, you also mentioned that some people, like you said earlier in the interview too, some people were kind of waiting because they thought, oh, maybe it's going to go lower, and you had told people to lock in at that point. So now it's higher. Well, so now when it goes back down, we're back to lock in at that point.
That's right. So for 2 years, you and I have talked about the dips, take advantage of the dips. And we had a nice dip 2 weeks ago, right before that Fed rate cut. So the advice now and on the news, lock in before the rate cut. So you kind of get the market rallying a little bit up into the rate cut. Don't wait for them to cut rates, because that rate cut really isn't affecting the long-term rates. So that's your credit cards, that's your home equity lines, car loans, things like that. So pay attention to that. Shop your rate with a mortgage broker. Always do that. And just call us anytime if you need any advice. 843-524-2404. We'll try to pick that phone up.
Yeah. And you also mentioned, you said the 700% increase in refis, but you have said, for the longest time you weren't doing any refis, and now it's almost 80% of what's going on. So people are really interested in that again. It
changed pretty quickly. Well, the government took away, Americans love to refinance, they love to consolidate their debt, and we had all this equity, but the rates were so unattractive for 2 years that nobody did anything. And now there's just trillions and trillions of dollars, over 7%, that wants to refinance. So those applications are coming in right now, and the closer we get to 5.0, 4.5, you're going to have the 3.5%, 4% people refinancing or putting their homes on the market as well. So that activity is only going to pick up from here for sure.
And we've got about 10 seconds left, but your final prediction. We're right there at the end of the year. Are we still going to be down?
Well, I hit my forecast of 5.0 on the government loans. All right, that's bumped back up to about 5.2 right now. Conventional loans got down to 5.3. They're at 5.7. I still think everything's going to be at 5.0 by the end of the year. So
right,
we'll see
what happens. Thanks,
Yeah.
Benji.